Hi guys, this is Kayong here. In this video, what I want to do is to show you behind the scenes of how I analyze and trade the financial market. Now earlier today, I posted on my Facebook page that one of the particular pair that I'm watching this week is the US dollar versus the Canadian dollar, right? The dollar Canadian. And in this particular video, what I want to do is to break down from the top-down analysis approach all the way to how then eventually we actually execute a trade. So with that, let's look into the charts itself, and from there, hopefully you gain some insights that is able to benefit and of course help you in your own trading journey. Alright guys, so this is the chart on the dollar Canadian. What I'll do over here is to break it down from the big picture, the higher time frame, all the way to a smaller time frame where eventually when the opportunity presents itself, we'll be able to execute and take a trade from it itself. Right, so over here on the daily chart, what I'm looking at on the dollar Canadian, alright, what I always do is to focus on the right side of the chart because that's the most recent price movement and information that we can actually analyze and make a prediction and forecast from it. So from here, what I see over here is that this entire move itself is what I term as corrective, meaning that the whole development of price is slow and it's not moving in a very strong particular direction. And what I usually do is I add in some trend lines to give me some framework in which of how I can visually helping me to understand what's happening in the financial charts. Right, and from here what I'm doing is actually a very simple step is to kind of like connect the top and bottom. That means the top over here, you know, two tops I've just connected with a line, and then the bottom over here I'm just connecting it with another trend line as well. And once I do this, immediately on a visual perspective, I'm able to really see this whole part here as one piece, and it's a corrective movement. Okay, in other words, on a longer term perspective, of course the direction is to the upside because of this corrective pattern. But what I want to also highlight over here is this is on the daily chart, which means that it's really a big picture, longer term forecasting and analysis. So as a trader, while it's very important to understand the big picture, okay, if you take trades just from a singular perspective, which is just based on the daily time frame, then it's very difficult psychologically because you probably need to be strong enough mentally to hold on to certain drawdowns as the market doesn't move in one direction all the time. So what I like to do is once I understand the big picture, okay, I also usually drop it down to some smaller perspective time frame, like for example over here the 4-hour time frame. And once I drop into the 4-hour time frame, now I get extra and more information compared to the daily perspective. And focusing again on the right hand side of the chart, okay, what I see over here is that the price development, at least recently, has been pretty slow and it's not really strong in terms of momentum. Okay, and usually when I see this kind of movement, right, it's going up definitely, but it's a very slow move. Okay, and usually when this happens, it means that the momentum, the fuel, the catalyst to the upside might be limited. Alright, it's not that it's definitely not going to go higher, but the potential, the higher probability or the bigger potential in which I want to focus on is actually on the reversal whenever I see something like this. Okay, and what I also want to highlight is that if you have some background in certain technical analysis, that will also benefit in understanding or even looking at the technical chart how we can analyze the market. Okay, so right now over here, of course, we can see there's certain tops over here. You can see this is one high, this is another high, and this is another high. Okay, so if we just simply drop an average estimation of, you know, some of the highs over here, okay, this is the area in which that if price continue to go higher, it might also form another new top. Okay, so some technical patterns you might potentially see is if this is one top, a double top, or even a triple top eventually forming over here. Okay, but of course I don't just trade based on such double top, double bottom, or even triple top pattern. But what I want to highlight over here is that if you have certain knowledge of technical analysis, you'll be able to stack those things together. Now what I'll do next is, of course, I'll bring down to the 1 hour time frame. And again, just now what we saw on the 4 hour is that this kind of movement, it's slow, it's corrective, which means that the bigger potential is to the downside. Okay, and at least for the short term, that's what I'm going to focus on. Right, because just now when we look at the daily time frame, we understand that the longer term big picture is to the upside. But at least for now, the short to medium term perspective is the opportunity lies in the downside. Okay, and what I'll do is I'll then again bring in my trend line. And what I'll do is just simply add in, same practice. I'll just draw in some lines as a visual reference so that I'll be able to clearly see what is this developing. Okay, again, if you have some background and knowledge in technical analysis, this pattern itself shouldn't be foreign. Alright, you can call it a diagonal pattern, a wedge pattern. Basically in our communities, what I'll just call it is a crawl. Okay, simply because it's moving in a particular direction but it's losing its energy. Right, it's like going uphill but you're getting more and more tired, and eventually you use up the entire energy that you have, and the higher probability is for it to reverse and go lower. Okay, and that is where I'm actually looking out for this opportunity for this particular week, because we have some few confluences that are stacking up for us. Alright, number one, of course, is on the 1 hour we have this particular pattern, a wedge, a diagonal. Right, in Elliott wave, if you know some counting, that is also a potential pattern forming that is signaling and indicating a high probability reversal pattern. Okay, on the 4 hour, what we have is a potential triple top as well, which where the pattern is almost completing at. And with that in mind, okay, going back to the daily, meaning that if what we are looking at right now, and if our forecast and market goes according to what we have analyzed and forecast, is we are expecting that price, at least in the short to medium term, to actually push down one more time before the longer time frame, larger perspective analysis will eventually take place. Okay, so having that in mind, all right, where we can set our short-term target, of course, is then this particular recent low, because it can potentially form a double bottom. Okay, so if I go back to the 1 hour, which is where I usually execute my trade, the next step I want to do is to consider if it's worth taking the risk, right? In other words, I'm looking at the risk to reward ratio. Okay, and in TradingView, I have this tool that is very useful, very easy as well. So basically, I'll just set in my, where I'm actually looking to enter a trade, where I'm going to put my stop, where would my take profit eventually going to be. Okay, so I'm just leveraging this tool to give me a very quick reference in terms of, is this potential trade idea worth taking the risk? Okay, so over here, simply if I'm using a very simple entry approach, which is to break out of the particular pattern, then my entry will be at the bottom of this particular pattern with a stop at the previous high, and just now we have established where this move can potentially go towards, alright, which is over here. So when I put in this particular tool, which is the short setup, okay, I can clearly see over here the risk to reward ratio of this particular idea, this trade idea, can be as high as 7.5. Okay, close to 7.5 times. In other words, what it means is that for every dollar that I'm putting at risk, I can potentially get back close to 7.5 times of the particular risk. Okay, and in such situations, such context, I usually term this kind of trade setup or even idea a no-brainer. Basically, what it means is that, whenever I see something like this, a risk to reward ratio as high as 1:7 times, I will always take the trade. Okay, which means that mentally, psychologically, I'm okay with taking a few losses, even if this trade doesn't work out according to plan. But because I know that the risk to reward ratio is so high, it's always worth taking that particular risk, because whenever one of the trade, really work out very nicely, I will win back 7 times the amount of money that I'm putting at risk. Okay, so with that in mind, what I'll do is I'll just simply wait patiently, alright, for the price to actually break out of this particular structure, this particular pattern called the diagonal, and I would then start to enter the trade and manage it accordingly. Okay, so of course there's some very minor details, like, you know, I would like to put it in some very nice number like this. Over here, I'll probably put it at 1.3285, alright, with the stops slightly above the high, 1.333. Okay, and of course the take profit over here, I'll just round out a little bit to 1.2950. Okay, so that will give me a risk reward of 7.44 with a stop loss of about 45 pips. Okay, and I'll just place a pending order, which means that it's an automatic order that when price hits my desired entry price, automatically it will trigger the trade for me with my stop loss in place and my take profit in place. Okay, over here, some background into what I expect on this trade is that once this price enters, I'll expect it to go fast and strong, and from there it's a very easy trade to manage, because once I see a first impulse move, something like this, I'll immediately shift my stop loss to break even to manage my risk accordingly, right? And once that happens, this particular trade is what I call a risk-free trade, because the worst case scenario is that I'll never lose money on the particular trade. And of course, if I see another opportunity to add on, to scale in onto the trade, that's something that we're gonna do as well. Okay, but in this particular video is more of just showing you the top-down approach of how I actually analyze and forecast the market to the steps where we eventually execute and take a trade. Okay, and hopefully through this sharing, you'll be able to understand a little bit more behind the scenes of the thought process of how a trade is eventually being executed, and hopefully it'll be able to provide you some insights to benefit for your own particular trading. Alright, so if again you have any questions, as always, right, you have any questions, any comments, feel free to drop it in the comment section below, or feel free to actually private message me, and I'm more than happy to actually share with you my personal trading experience, some lessons that I've actually learned. And of course, you have suggestions on how we can provide more videos of sort of, do let us know in the comment section below. Right, so with that, I'll pay very close attention to this particular pair on the dollar Canadian, and let's hope for the very best over here, right? Because not all trades gonna be working out as nice and as expected as what we want it to be, but along the way, as traders, we always want to manage our risk. Right, so with that, I wish you guys all the best for this particular trading week as well, and I'll talk to you again next week in another video similar to this.